So what's the next big threat to our economy? It's the kind of question that keeps financial experts staring at the ceiling at night. Well, today we're going to put on our detective hats and investigate where that next crisis might be hiding.
To even begin to find potential threats, we first need to know who's already on the case. So let's meet the official guardians of the U.S. financial system.
This is the Financial Stability Oversight Council, or FSOC for short. Think of them as the government's team of elite financial detectives. Their entire job is to spot trouble before it boils over into a full-blown crisis.
And believe me, this isn't just another committee with a fancy acronym. The FSOC brings together the heads of every single major U.S. financial regulator all in one room.
I mean, this roster is a total who's who of financial power. It's chaired by the Secretary of the Treasury and includes the chair of the Fed, the head of the SEC, the FDIC. Basically, if there's a major regulator, they have a seat at this table. This really is the government's financial A-team.
So their whole mission, in their own words, is to maintain financial stability. What's that in plain English? Well, they make sure the incredibly complex plumbing of our economy keeps working smoothly, so money can flow, businesses can operate, and all of us can manage our financial lives.
Okay, so what are these super watchdogs actually looking at right now? Well, if we crack open their 2024 annual report, they've got a lineup of what we can call the usual suspects. These are the known risks they are monitoring very, very closely.
First up is commercial real estate. This probably isn't a huge surprise. With the massive shift to remote and hybrid work, all those big, shiny office buildings in major cities are under a ton of stress. Vacancy rates are climbing, and that puts serious pressure on the property owners and, of course, the banks that loan them all that money.
Next, let's talk about the wild world of digital assets. The FSOC is pretty worried about something called concentration risk. You know, the old saying about having too many eggs in one basket? Well, take a look at this. One single stablecoin, Tether, makes up about 70% of its entire global market. If Tether ever wobbles, it could send shockwaves through the entire crypto world.
And finally, there's climate risk. More frequent and severe weather events are causing absolutely huge losses for insurers. And this isn't just an insurance problem, it snowballs. It makes it harder and way more expensive for people to protect their homes, which, in turn, creates new risks for the mortgage market and the banks behind it.
But while the FSOC is keeping a close eye on these known threats, what about the unknown? There's a totally different kind of risk that's been growing in the shadows, away from the public eye and the usual regulatory microscope. It's called private credit.
So what is it? Simply put, private credit is lending that happens away from the public eye. So instead of a company getting a loan from a traditional bank or issuing a public bond, they go and borrow directly from these specialized investment funds.
To really get the scale here, you have to zoom out and look at the whole asset management universe. We're talking about a world projected to hit $200 trillion by 2030. That's trillion with a T. And inside that massive number, private credit is becoming a seriously dominant force.
But it's not just about size, it's about profitability. I mean, look at this projection. By 2030, private markets, including private credit, are on track to generate over $432 billion in revenue. They are fast becoming the economic engine of the entire industry. And this chart really just says it all. By 2030, private markets are projected to account for more than half of all the revenues in asset management. This is not a niche corner of finance anymore. It's becoming the main event.
Now, as you can imagine, this kind of explosive growth has Wall Street totally split. Is private credit a brilliant financial innovation that's filling a crucial need, or is it a disaster waiting to happen? The debate is getting pretty fierce.
So you really have two completely different views. The bulls, they say this is fantastic innovation. It's filling a lending gap that the big banks, tied up by all those post-2008 regulations, just can't serve anymore. But then you have the bears, and they point to a huge problem, opacity. Because these deals are private, it's like a black box. Nobody knows for sure how risky these loans really are, or how much debt is secretly piling up. That's that hidden leverage everyone is so worried about.
One of the loudest alarms is coming from Jeffrey Gundlach, a legendary investor they call the Bond King. He is not mincing words. He calls private credit, and I quote, the next big crisis, arguing that it only looks stable because no one can see the problems hiding just below the surface.
But then, pushing right back against that dire warning, you have giants like JP Morgan. They argue that, yeah, there might be some problems here and there, but the private credit world just isn't big enough or connected enough to the main banking system to cause a full-blown meltdown. In their view, the risk is contained.
So where does that leave us? Well, this is basically a live investigation. The experts are divided, the watchdogs are paying very close attention, and the stakes, well, they couldn't be higher.
So here's the situation as it stands. Regulators are trying to get a much better look inside this black box. The debate between the bulls and the bears rages on. And the crucial thing to remember is that this isn't just some abstract Wall Street issue. The health of this shadow banking world can have very real consequences for the broader economy, affecting everything from business loans to our own retirement funds.
So we are left without one central question. Is this explosive growth in private credit a brilliant, healthy evolution, or are we watching the silent construction of the next financial crisis? The unsettling truth is, no one knows for sure. And that uncertainty, well, that's exactly why it might be the biggest risk of all. Thanks for joining this explainer.